Good morning. This is Bloomberg Daybreak Europe. I'm Joanna Bersecci in Dubai, and these are the stories that set your agenda. Reshaping global trade. The sweeping new U.S. tariffs are officially in effect. Donald Trump also announces 100% levies on chips, but says companies producing in the U.S., like Apple, are exempt. Tariffs on India doubled to 50%, while the Swiss president leaves Washington empty-handed. Asian stocks and U.S. futures gain on relief over those tech exemptions. Nvidia, Samsung, and TSMC all making gains. And the Bank of England is set to cut rates to their lowest in 2 years as policymakers grapple with a slowing economy. Good morning, everybody. Well, the earnings are coming thick and fast. We've just had 4 companies drop earnings now. I'm going to start with Siemens, just to give you some of the headlines there. Third quarter revenue, 19.38 billion versus estimates of 19.37 billion. So in line. The industrial business profit coming in at 2.82 billion versus estimates of 2.78 billion. So a bit of a beat there. Third quarter orders at 24.72 billion versus estimates of 21.72 billion. So that's quite significant beats on the orders side of things. And the CEO, Roland Busch, is going to be speaking to Bloomberg's Oliver Crook. You can catch that interview at 6:45 a.m. London time, so in about 45 minutes. Switching on, we also got some results coming through from Allianz. So over there, we have second quarter revenue coming in at 44.5 billion euros. The operating profit at 4.4 billion versus estimates of 4.28 billion. So beat on profit. They've completed 1 billion euros of an ongoing buyback in the first half of 2025. They still see the full year operating profit in the range of 15 to 17 billion. That is the 15 billion is slightly below the estimates of 16.82 billion. So those are coming through. We will have the first interview with the Allianz CFO at 8:30 a.m. London time. Now onto the pharma space. So this is going to be very much in focus for investors. Merck coming through now, and they're saying they have got, well, let's take a look. Well, Trump has sent letters. We know that. Just bringing up the actual numbers here. I will get them to you in just a second. Full year net sales of +2 to 5%. That is coming through. And this, of course, on back of some of the pressure that the company is facing on back of the tariff threats and the letters that the Trump administration has been sending. But the EBITDA number there up 4 to 8%. And it was previously 2 to 8%. The Merck CEO will be speaking exclusively to the opening trade at 7:30 a.m. London time. And it's not finished now. We also have Sandoz as well. Those results coming through. Second quarter net sales, 2.75 billion versus estimates of 2.72 billion for Sandoz. The first half core EBITDA, 1.05 billion versus estimates of 969 million. So a beat on the first half. In terms of mid-single digit net sales growth, they see it similar to what it was before. The full year core EBITDA margin about 21%. So bottom line is we got a beat both on sales and on core EBITDA for Sandoz. The Sandoz CEO is on the opening trade at 7:15 a.m. London time. Okay, so all of those have just come through. Let's just take a quick check at how markets are faring in reaction to some of these tariff headlines from overnight. European markets are up 0.2%. FTSE 100 slipping ahead of the Bank of England meeting. S&P and Nasdaq also trading up and positive, with some relief rally coming through for semiconductors, at least the ones that have secured exemptions like Apple, TSMC, and the like. So that is boosting equity markets today. Switching over, let's also take a look at cross-asset that we're watching out for. We have the MSCI Asia Pacific, the handover also positive as well, though a bit of a dip in the Nifty. No surprise there, with India being the latest target of Trump's tariffs. 10-year yields at 4.24, moving slightly higher. We had a weak auction yesterday, so all eyes will be on the 30-year auction today in the U.S. The pound in focus, as I said, the rate cut for today is fully penciled in out of the Bank of England, but all eyes will be on the language, any change in forward guidance. We'll speak about that shortly with Lizzie. And then Brent also, $67 is where we're at, up 0.6%. Weakening stockpile situation in the U.S. And also, bear in mind the doubling of those tariffs on India because India continues to buy Russian oil. That's all being factored in. Now, President Donald Trump's sweeping new tariffs are officially in effect. Taken together, they will push the average U.S. rate to 15.2%. That's the effective tariff rate, according to Bloomberg Economics. But Trump is still surprising markets, announcing a 100% tariff on chip imports while exempting companies moving production back to the U.S.
We'll be putting a tariff on of approximately 100% on chips and semiconductors. But if you're building in the United States of America, there's no charge.
For more, Bloomberg senior editor Ramzi Al-Rikabi joins me. Okay, let's just start with these new tariffs on chips. 100%, that feels like a really high number, but then it comes with a lot of exemptions.
That's right. Good morning, guys. It was a surprising number, but when you looked at who you're speaking with, Tim Cook there, who just was announcing a $100 billion new investment in the U.S., it made it clear that it's kind of hard for us to immediately figure out who this is supposed to impact. It's obviously not going to be Apple. It won't be Taiwan's TSMC. They're investing in the United States. The South Koreans said it's not going to be their producers either because they're invested in the United States. There might be some legacy Chinese chip developers who could be on the downside here, but some of the biggest suppliers and biggest companies that are in this space have already sort of answered the call that Trump was asking for, or even in the Biden administration during the CHIPS Act era to invest in the U.S. So it was a big splashy thing to say, but it's not immediately clear like what kind of impact it's going to have on the semiconductor producers or into imports into the United States.
Let me ask you about the other big headline as well, which is the doubling of tariffs on India overnight. And it really does feel as though President Trump sees these tariffs as a means of enhancing his political objectives. It's not just about the rewiring of trade. What do we know about this new 50% tariff rate and the likelihood that this ends here?
Like the chips, he's full of surprises. As I'm sure you recall, India and the U.S. have been negotiating for a while as he got closer to this August 7th deadline for reciprocal tariffs. He surprised India with a 25% tariff, which was higher than all we're expecting, threatened even higher rates because of buying Russian oil, and he came through with that, now effectively having a 50% tariff on India because it has been buying the Russian oil. Now, that has been flowing into India for a while now, since if you remember from the invasion of Ukraine in 2022, the G7 and other countries have been trying to squeeze the market and try to squeeze that revenue, and a lot of it was going to India through what they would call the shadow fleet. It was a very poorly held secret, like everyone knew that the oil was going to India, but from the U.S. perspective, it tended to be something they could accept because in Asia, at least, they see India as a counterweight to China. Now, why Trump is coming out now and being so aggressive is a bit confusing. In one sense, he seems to be blowing up that alliance with India, and in another, he seems to be aggressively trying to pressure Russia towards a ceasefire. He said he would end that war in Ukraine. Vladimir Putin doesn't seem to be playing along and making that work for him, and he has a deadline of the 8th for Russia to come to the table. So this is probably more about trying to pressure Russia than it is about India. But in the moment, he's angered India, he's angered Modi, he's even gotten the Indian opposition on Modi's side, calling the action bullying of India.
Yeah, that's quite the achievement. Bloomberg's Ramzi Al-Rikabi, thank you so much. Well, meanwhile, the Swiss president has left Washington without announcing any success in lowering the 39% tariff set by President Trump. Switzerland currently faces the highest tariff rate of any developed nation. Joining us now is Bloomberg Swiss economy and government reporter Bastian Benrath-Wright. Bastian, so I guess Switzerland, they tried their best. The president tried her best. She went to Washington even to meet with the Secretary of State to try to bring that tariff rate down. But no, 39% rate now going into effect.
Yeah, that's true. The tariff rate went into effect as of midnight New York time, so just over an hour ago. And as you said, it's the highest rate which Trump has slapped on any industrial nations. We're in the ballpark with countries like Laos and Lesotho and so on. It's definitely a blow to Karin Keller-Sutter's legacy. However, I think what is important is that the world right now is racing to make promises to Trump. We've just seen it with Apple, it's I say at least doubtful, like if all of these promises will be kept, right? And I think what we've seen playing out in Washington is just Karin Keller-Sutter, the Swiss president, but also just in general a Swiss approach of like, if you make a promise, then you have to keep a promise. So I think this approach to Trump of like, promising him whatever he wants to hear, I think she just kind of refused to do that, and this is why she had to leave Washington empty-handed. That doesn't say, however, that a diplomatic solution can be found, say, over the next coming months. I think this is what's happening now. The newest development is that when she lands, she's about to land in Bern these minutes, and this afternoon, European time, the Swiss government is going to meet for an emergency meeting. This has just been announced, and then they will make decisions. We don't know what decisions that will be. So far, they have said they will not implement countermeasures. That was their stance so far. Maybe that has changed now. If that has changed, we will definitely keep you posted.
Yeah. Well, Swiss watches just got almost 40% more expensive for U.S. consumers as of today. Bloomberg's Bastian Benrath-Wright in Zurich. Thank you so much. 3 Federal Reserve policymakers have said they're concerned about the softening U.S. labor market. The comments by Lisa Cook, Neil Kashkari, and Mary Daly follow sharp downward revisions to jobs data.
The labor market has softened, and you can see this everywhere in the U.S. economy and here as well. And I would see additional slowing in the labor market as an unwelcome sign. So all this means, as you put it together, that I think we'll likely need to adjust the policy rate sometime in the coming months.
Let's bring in Bloomberg's Valerie Teitel. So the jobs report has got these policymakers sounding a lot more dovish, Val.
Yeah, that's exactly right. And we're seeing some pressure on the U.S. dollar in sympathy. We had some fresh concerns you heard there from Mary Daly talking about the softening jobs market. We also heard from Lisa Cook yesterday. She's a Fed governor, a voter this time around, saying that she is concerned about the labor market and said those downward revisions are very much a sign of a turning point in the U.S. economy. We also heard from Neil Kashkari, another regional Fed president, saying the labor market is cooling and it would warrant cutting sooner rather than later, and he prefers not to wait. All of this dovish commentary has led the dollar to continue its weakening slide. We're now down for around 5 sessions in a row on the Bloomberg Dollar Spot Index, weakened nearly 1.5% in that time frame.
Well, meanwhile, President Trump has said he may name a temporary replacement for the outgoing Fed governor, Adriana Kugler, and he revealed that one person has been eliminated from the race to replace the Fed chair, Jerome Powell.
Yeah, we've started the interviewing process. Scott and I and Howard, a lot of people, JD, we have some great candidates. It's probably down to 3. He doesn't want the job. He said, do you like this job better?
Yes, sir.
I mean, he was a candidate, but I don't think he'll take it.
Will the new Fed governor be temporary?
We're probably going to go with a temp and then a permanent, I think.
Are the two
So the temp is going to be named, I'd say, over the next 2-3 days, and then we're going to go permanent.
Are the two Kevins the leading contenders for the permanent spot for the chair?
Well, the two Kevins? The two Kevins are absolutely, yeah. They're both very good.
This is turning into a new episode of The Apprentice. We're now down to 3 candidates who could likely replace the Fed chair, Jerome Powell. Who are they, Val?
Well, look, we're down to 3 candidates. We know that he's talked about the 2 Kevins. That's Kevin Warsh and longtime economic advisor Kevin Hassett. There is still one more name. We're not so sure who he is talking about. A lot of, intrigue around this Fed governor pick, and also some new intrigue there where he's talking about, the president is talking about perhaps naming a temporary candidate to serve out the remaining Adriana Kugler seat, which lasts basically for the next 6 months until the end of January. This could perhaps tariffs allow the president to keep his option open when it comes to that Fed chair pick in May next year, and give him more time to assess candidates. But this new pick for that Fed governor seat that Adriana Kugler is leaving vacated has 4 more decisions to take place on. It's unlikely we get that candidate seated by September 17th. Remember, they still have to be confirmed by the Senate, which is currently on summer recess. But this, as you mentioned, could very much turn into an episode of The Apprentice, because the president could see how this candidate votes in 3 meetings before deciding to make that governorship permanent and that seat last 14 years.
The show goes on. Bloomberg's Valerie Teitel, thank you so much. Okay, beyond tariffs, let's just take a look at the day ahead and what is on our agenda. We spoke about it earlier. Bank of England decision, of course, very important. 12 p.m. midday UK time. The press conference kicks off at 12:30, so you don't want to miss that. They likely will be cutting interest rates, but we're watching out for the vote splits and any change in the forward guidance. 1:30 p.m., the weekly U.S. jobless claims. I think this one will be scrutinized in a lot of detail after last Friday's payrolls print. And then 6 p.m. UK time, the 30-year bond auction. We had a weak 10-year auction yesterday, so again, could be another important one in terms of the direction of travel for U.S. fixed income. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB, go on the terminal. And coming up, car giant Toyota sees U.S. tariffs hurting its full-year numbers. More details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Toyota has warned that it will take a big hit from U.S. tariffs. Let's bring in Bloomberg Asia transfer reporter Danny Lee. I guess it's not a surprise that they're taking a hit, but what exactly are Toyota saying today?
Yeah, Jemima, good morning. Toyota, the world's biggest car maker, is saying it's going to take an almost $10 billion hit to its operating income from the U.S. tariffs. Its earnings out just at the top of the hour. It's also downgraded its operating income forecast. It was expected to deliver operating income for the full year of 3.8 trillion yen. That's now down to 3.2 trillion. So that's down about $4 billion. And it's just that the cost of importing cars into the United States, this recent deal between the US and Japan, this rate of 15%, which is lower than the 25% that the market had expected. No, that's going to weigh heavily on someone like Toyota to the tune of 1.4 trillion yen. And so, it's not a surprise given we've seen other car makers, particularly in Europe, Mercedes, Volkswagen, Stellantis, all coming out with lower outlooks and guidance because of the tariffs. But yeah, this is a punishing one for Toyota.
Huge number, that $10 billion hit, really sizable. What are they saying about the outlook at this point? Are there any green shoots to speak of there?
Well, despite the fact that you've got this impact on operating income, Toyota still sees sales of 11.2 million units, which, by having an unchanged guidance, you'd expect it may well have to pass on higher costs to consumers. And so it doesn't see necessarily any distractions or any dissuasion from these kind of things. But when you do look at the overall earnings picture, particularly in this fiscal first quarter, it did beat on the operating income line, and it has kind of met the expectation of sales. So broadly, that first quarter earnings did do well, and but still the market trying to digest the impact of the tariffs, shares down 1.1% in Tokyo.
Yeah. Bloomberg's Danny Lee, thank you so much for the update on Toyota. Well, coming up, President Trump says there is a very good chance he'll meet Presidents Putin and Zelenskiyy. Details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. President Donald Trump says that there is a very good chance he will meet with Russian President Vladimir Putin and Ukraine's Volodymyr Zelenskiyy soon in another bid to broker peace between the two countries.
We had some very good talks with President Putin today, And there's a very good chance that we could be ending the round, ending the end of that road. That road was long and continues to be long, but there's a good chance that there will be a meeting very soon.
How close do you think you are to a deal?
Excuse me?
How close do you think you are to some kind of deal?
Well, I don't want to say. I've been disappointed before.
He says he's been disappointed before. The effort to convene a meeting came hours after Putin hosted U.S. Special Envoy Steve Witkoff for 3 hours of discussions in Moscow. For more, I'm joined now by Tony Halpin, who leads our Russia coverage. Let's start with the Witkoff meeting. Widely anticipated. It went on for 3 hours. What do we know about what was discussed in that meeting?
Yeah, not a great deal. I mean, the Kremlin has been keeping its cards quite close to its chest about these talks. They said that there were signals sent to Trump and that they received some from the US president. They shared the US assessment that the talks were rather constructive and they had a quite optimistic tone about them. But the nitty-gritty of it, we don't yet know. We've seen some reporting from our own reporters that there may be some discussion and focus on some sort of land swap if they get down to talks with Ukraine as a way to end the war. We have to remember this is all Ukrainian land to begin with, so that's not really a concession from Russia.
Yeah. And meanwhile, Trump once again is floating this three-way summit, potentially, with Zelenskiyy and Putin. How likely is it that happens, and does that take us one step closer to a ceasefire?
Yeah, I think that's actually quite significant because Putin and the Kremlin have been pressing for some time for a sit-down with Trump as a way to move these talks forward. And the fact that Trump now seems willing to engage in that process indicates, I think, some shift from the US side. As for a ceasefire, well, tomorrow is the deadline that Trump had originally set, right,
Yeah.
for these for the fighting actually to come to an end, for Putin to halt the war or face sanctions on oil sales. Trump went ahead with pressuring India yesterday by announcing 25% sanctions. And we've yet to see evidence that Putin will, in fact, comply with a ceasefire. So tomorrow will be quite an important day.
Yeah. Tony, thank you so much. Bloomberg said Tony Halpin. Now to some of the other stories making news. Saudi Arabia has raised crude prices for a second consecutive month. It signals confidence in demand for its barrels as OPEC Plus continues to ramp up supply. Saudi Aramco will raise Arab light crude to Asia by $1 to $3.2 a barrel. The world's biggest exporter has been leading OPEC and its allies in raising output as they seek bigger market share. Former leaders from Tesla's supercomputer unit are poised to bring a competing startup out of stealth and raise hundreds of millions of dollars. Bloomberg understands the startup, called Density AI, is developing the full stack of technology used to power AI data centers for the car industry. Roughly 20 former members of Tesla's Dojo project, including some senior-level individuals, have joined Density AI. And Citigroup CEO Jane Fraser has had a meeting with Donald Trump to discuss how the bank might be involved in public stock offerings for Fannie Mae and Freddie Mac. The mortgage giants have been under government conservatorship since the 2008 financial crisis. And in May, the U.S. president said he was seriously considering bringing more of their shares onto the market. And coming up, the Bank of England is expected to cut rates today as the central bank contends with a slowing economy. We'll have the details next on what to look out for. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Joanna Versace in Dubai, and these are the stories that set your agenda. Reshaping global trade. The sweeping new U.S. tariffs are officially in effect. Donald Trump also announces 100% levies on chips, but says companies producing in the U.S., like Apple, are exempt. Tariffs on India double to 50%, while the Swiss president leaves Washington empty-handed. Asian stocks and U.S. futures gain on relief over those tech exemptions. Nvidia, Samsung, and TSMC all making gains. And the Bank of England is set to cut rates to their lowest in 2 years as policymakers grapple with a slowing economy. Now onto the markets with those new tariff announcements and actually a bit of a relief rally coming through in some of those tech names. The semiconductors performing quite well. Apple up almost 5% in after hours. This after unveiling another $100 billion worth of investment into the U.S. So exemptions for some of the big tech names that could have been caught in the crosshairs of this 100% tariff rate on semiconductors. European markets looking up as well, up 0.5%. The FTSE 100 leaning towards the red as we get into the Bank of England meeting. But S&P and Nasdaq, as I mentioned, positive today in trading in future space. Switching over, though, the handover from Asia Pacific was mostly positive as well. So green on the screen there. And again, a positive reaction in some of the chip makers, too. The likes of TSMC up almost 4% in trading, too. The relief rally coming through. 10-year yields up at 4.24, about 2 basis points higher. All eyes will be on that 30-year auction later today. We had a weak 10-year auction yesterday. But, of course, the run-up to this, we've seen a massive move lower in yield. So perhaps investors were not enticed by these lower yield levels. The pound in focus as well. 133.70 is where we're at, getting closer to the Bank of England decision where a rate cut is expected. But we'll be watching out for the split, whether there's a vote split and a language on the forward guidance. And then Brent, the energy complex, 67.33 is where we're at right now, about 0.6% firmer on the day as we talk about those extra tariffs that the U.S. are applying on India for buying Russian oil. Also, keep an eye out on the inventory situation with U.S. stockpiles yesterday dropping quite surprisingly. All right, let's switch over because we got some more earnings coming through, this time from Rheinmetall, one of the best performing stocks this year on the DAX. And you can see it's up 190% year to date. So first half sales have come in a miss versus expectations, 4.74 billion versus estimates of 4.89 billion. The first half operating profit has also missed a little bit versus expectations, 475 million versus 491.3 million. In terms of the guidance, they still see full year sales of plus 25% to 30%, and the second quarter backlog at 63 billion euros. Still just flagging that this is one of the best performing stocks on the Stock 600 and the DAX, up 190%, as a lot of money has gone into the European defense sector this year. Okay, let's talk about the main story in the UK today. The Bank of England is set to cut interest rates to the lowest level in 2 years as policymakers contend with a slowing economy and a jobs market rattled by higher taxes. Our UK correspondent Lizzie Burden joins us now from London. So a cut is penciled in. Where could the surprises come from, Lizzie?
Well, the expectation, as you say, Jemana, is that they are going to stick to this quarterly cadence of quarter-point cuts, so taking the key rate to 4%, which notably is lower than the Fed. Maybe that is surprising, even if it's expected, given that inflation's at a 17-month high. But the reason is that they would do this because you've got a slowdown in growth and a contraction in hiring. And as you say, that comes back to the policies from the Chancellor to raise the payroll tax and to raise the minimum wage. So that hit in April. And yes, the Bank of England doesn't have a dual mandate like the Federal Reserve, but the Governor, Andrew Bailey, at least is arguing that this spike in inflation will be temporary. But we are expecting to see that reflected in the forecast, a rise in the short-term outlook for inflation. Now, because of that stagflationary backdrop, that is why we're expecting a three-way vote split. This is the expectation of economists, that you'll get 2 voting for a half-point cut, 2 voting for a hold, and the rest voting for the quarter-point cut. And as you say, we really need to keep an eye on the guidance here. If they choose to scrap the word gradual to describe the rate path ahead, then our economists say that that would be a hawkish hint. At the moment, markets are pricing in one more cut after today's cut, but our economists say that if you take away gradual, it suggests that November isn't such a done deal.
Yeah. Lizzie Burden, thank you so much for the preview outside the Bank of England. Well, we're going to bring you that BOE rate decision live at 12 p.m. London time. And for viewers in the UK, we'll have full coverage of the Governor Andrew Bailey's news conference in a special broadcast starting at 12:15 p.m. You can also watch it live on the terminal and on YouTube. And Francine Lacroix will be speaking to the Governor Bailey later today. We'll bring you that interview from 4 p.m. on Bloomberg Radio and TV. Now, for more on what to expect, I'm joined now by Nina Skero, the CEO of the Center for Economics and Business Research. Nina, so Lizzie just gave us a nice overview of what to expect. A 25 basis point rate cut, I guess, fully priced in. And yet, it's coming on the heels of yet another upward surprise in inflation last month. How much weight do you think the Bank of England will be placing on those higher inflation numbers?
Well, as we heard from Lizzie, given that we're expecting a three-way split, obviously you could put equal amounts of weight on the fact that inflation is well above target, and also on the fact that there are genuine signs of loosening and slowing in the labor market. And I think with the various members making their cases, all of them are correct. And in terms of, where do you put more weight, given that the expectation is overwhelmingly for a cut, apparently you put a little bit more weight on that. I think one thing that we might not see so much in the minutes, but would be on the back of the minds of members, is also the autumn budget. Even though it's a few months away, it probably is going to have a bit of a downward impact on both the growth trajectory and possibly on inflation. So I think that'll also give a little bit of a boost to that case for a cut today.
Yeah, I mean, the question is not whether they cut, but whether it's going to be a dovish cut or a hawkish cut. What do you think the chances are of them changing the language around gradual and careful interest rate cuts in the future?
I think the language is more likely to be consistent with what we've seen in more recent meetings. I think because there's probably going to be some dissenting votes, I think the consensus will be that sort of the middle of the road option is to have a cut, which wasn't really a given until the last couple of weeks. We could have, I think, just as easily been in a situation where a cut wasn't expected, given where inflation is at the moment. So I think sort of a middle of the road approach would be to not change the language from what we've seen most recently.
So you mentioned some of the downside risks that the autumn budget could pose on the growth outlook. And we're looking at real GDP forecasts of about 1.2% for the UK economy. If things slow down materially because of the global growth environment, because of the upcoming autumn budget, will the Bank of England be able to cut as much as they want to, given the backdrop of inflation is still quite sticky?
They're going to be in a difficult position, and I'm sure that they're hoping that if that time comes when they want to cut again, and I'm not sure that they will want to cut again this year, hopefully they will be able to point to more substantial evidence that this spike in inflation is temporary and that households and businesses aren't reacting to it as if it were not temporary, because that's an important factor as well. There is, on the one hand, the expectations for is the spike in inflation going to be temporary, but there is also the question of how do employees perceive it, because if they perceive it as permanent and they bring that into their negotiating tables at work, then we're again going to be back at a position where even if the dynamics weren't such at the time, that could become entrenched in salary expectations.
Nina, thank you so much. Nina Skero, CEO of the Center for Economics and Business Research. Well, shipping giant Maersk is due to report second quarter earnings at 7 a.m. London time. Let's get more on what to expect with Bloomberg intelligence analyst Stefan Kovachev. What are you looking out for today in the Maersk results?
Good morning. We expect a very weak set of results from Maersk today with lower EBIT, lower margins. But the good news is that this should be very much expected by market participants. If you look at this time last year, we had major disruptions in the industry linked to the Red Sea. And freight rates were up 300, even more percent over the previous year. So now fast forward to today and we see that freight rates are lower, and we expect this softness to translate into Maersk Q2 results, with all eyes being on outlook for the rest of the year, considering the very volatile geopolitical environment that we live in.
Yeah, you say that. I need to ask about the T word, tariffs. How are tariffs likely to influence their business and the outlook today?
Well, tariffs are a natural negative for Maersk and for the industry, as they lead to higher prices for goods and lower demand for container shipping services. That being said, Maersk is very well positioned versus peers. They are a number 2 player in the industry, so a very big player with a market share of about 15%. They also have a relatively small exposure to the China-US route of only about 5% of volumes, which is also positive. And lastly, they have a very strong balance sheet with liquidity of about $27 billion as of the end of March. So they are very well positioned to weather some of the tariff storms ahead.
You know, if you look back at the last couple of months, there was a lot going on in the shipping space. You also had the disruptions or anticipated disruptions around the Strait of Hormuz, the Red Sea shipping. That's still, quite a difficult route. What other things should we be watching out for that could impact and influence the results today beyond just tariffs?
Well, indeed, you mentioned the Red Sea. That remains a wild card. But generally speaking, in a very cyclical industry, it boils down to supply and demand. By supply, I mean the supply of new container ships. For instance, during the pandemic, companies made a lot of money and went out and bought new vessels. And since it takes 2 to 3 years to actually build a container ship, a lot of this extra capacity is being delivered this year. We expect a 5 to 6% increase in capacity this year, which is negative for freight rates and negative for the industry. And on demand side, we all face inflation, tariffs, sluggish GDP growth. So a very uncertain demand environment as well.
Stefan, thank you so much for the preview. Stefan Kovacev from Bloomberg Intelligence. Well, coming up, industrial powerhouse Siemens reports a beat for business profit in the third quarter. We're speaking with the CEO, Roland Busch. That interview is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Well, lots of earnings have been hitting this morning, including Siemens, which saw a profit beat, 2.82 billion euros versus 2.78 billion euros. Our colleague Oliver Crook sat down with the CEO, Roland Busch. Here is what he had to say.
We are not so happy about the deal, but at the end of the day, I stick to what I said before. Now we have one, and we can start make our plannings based on what we have now on hand on tariffs. Talking about the uncertainties, this is really a topic. So you cannot have this kind of worms open for a longer time. I think everybody knows that. So we hope that this deal now between the United States and Europe is the deal which is set now, that they execute now accordingly, and companies can start planning and also release investments which they hold back.
But part of your thinking, is there a sort of in your mind this idea that actually no deal with the United States is final? And if that is the case, how does that alter how you think about running the business?
So nobody can say whether or not a deal is final. We know that in 12 or 18 months from now, there's still ambiguity and uncertainty. But we are starting our planning based on what we have on hand, and that we did before as well. When it comes to Siemens, we're quite resilient. So the impact on tariffs on Siemens is minor. That's what we said, and we continue saying that for the current fiscal year. Why that? Because we have a very, very strong local-for-local footprint. The value add local-for-local United States is above 85%. And we're also working on our productivity. We're working on prices, which we might pass on to our customers. So the whole package is good. The strongest one is really our good footprint, local-for-local content. We have also some local products designed, and we keep on designing local products for the market, not only for the United States, also for China. And that helps quite a bit in these times.
And going to a part of the market where maybe there's a little bit more certainty, the data center boom has been a sort of centerpiece of a lot of the conversations we're having about AI and building out technology in the United States. That is something that you benefit from. What do you see there in the outlook? Is that going to continue to grow robustly, and can you put some figures around that?
So we definitely see that the data center market is keep on growing. It's not only the hyperscalers, it's co-location companies or customers which we are serving. So we are serving all of them, the large ones, the smaller ones, and also in all regions. So we have a very, very strong portfolio there. We are benefiting from that. I would say in many cases we're even outperforming our competitors. That helps us not only in the top line, but also on the bottom line. We have very good products, good switching technology. We have a local footprint. We doubled our capacity in the United States on switching technology. And this spans from medium voltage to low voltage. So this is a trend which keeps on going. We don't see why it would stop at any point in time. It's not only about training models, but then comes inferencing of the models. So that will go on for a while. And that's where we benefit quite a bit.
Yeah, and another feature of the last few months has been kind of wild moves on the exchange rate between the dollar, the euro, and a great many other currencies. How are you weathering that, and how are you insulating your earnings and your sort of outlook from those swings that we've been seeing?
Yeah, I can tell you, for example, for our order intake, the impact in this quarter was 40 basis points. So it's not that big. So therefore, again, this is thanks to our global footprint. Let's see how that develops going forward. But currently, this is not really my big concern.
Okay, and then in terms of the digital industries and looking at China, do you see a turnaround there at all, or do you think it's going to be quite slow for the foreseeable future?
So I wouldn't call it a turnaround compared to what was happening in the past, this kind of recycle recovery. I always said I expect the Chinese market to come back gradually, and that's what we see. We see semiconductor business, for example, coming back, the automotive business having a slight increase. So they're coming back. Chinese government works on cleaning out the real estate problems on the one side, investing in high-tech manufacturing in order to drive productivity in a competitive environment. They're investing also in green technologies. So therefore, that's everything what they do now is tailwind for us, because we are the incumbent in automation. We drive digitalization in this country as well, but also a strong foothold on electrification. That helps the market. And according to our expectations, would come back, but gradually.
Bloomberg's Oliver Kirk speaking with the Siemens CEO Roland Busch there. Solid results out of the company. They cite minimal impact from tariffs, which is interesting, and demand being on the up coming out of China. Well, plenty more coming up on Daybreak Europe. This is Bloomberg.
The geopolitics and tariffs and things of that nature are still something we're all learning about as an industry. So as a result, we didn't give full year guidance.
Tariffs are always a bad deal for consumers. When you look at 15%, you can say 15% is better than the 30 that were announced, but it's worse than zero.
We did not expect to be able to ship to China because of some of the regulations. I think this administration, the Department of Commerce, the government has actually been very open.
I hope that the impact, right, is going to be minimized, but it's actually out of control.
I'm very hopeful that the Trump administration understands the predicament that we are in as they make these bilateral trade agreements, and they are going to work with us to do the right thing for our U.S. manufacturing companies.
Well, some of the CEOs we've been speaking to on Bloomberg reflecting the impact of U.S. tariffs. And of course, it has been a major feature of this earnings season in Europe and in the U.S. So many companies citing either a big impact or minimal impact. You spoke about Toyota earlier on, a $10 billion hit for the largest car maker in the world. All right, another major story from overnight, with President Trump floating the possibility of a three-way meeting between him, Putin, and Zelenskiyy. Let's take a look at what the prediction markets are saying. Well, earlier in the year, markets had the odds were something like 70% for that three-way meeting happening. It went all the way down to 20. Now it's up on the uptick again, 28%, with Trump floating the possibility. But still, let's see if that actually happens this time around. Remember, tomorrow is the deadline for those ceasefire discussions that President Trump had imposed on the Russian president. So let's see what happens in the next 24 hours. Could be key. Let's switch over. It's a big day in the UK today with the Bank of England expected to cut by 25 basis points. This is the backdrop, though. Quite interesting to see that economists have been raising their CPI forecast but cutting GDP estimates. And remember, the most recent inflation print actually surprised to the upside. You have some upward pressures coming through from food price inflation. That is the backdrop for the Bank of England today. Will they keep that cautious guidance about limited and gradual easing? Will they remove some of the wording around that? Or will they signal that they're not only cutting but quite dovish about the outlook, particularly because of some of the downside risks to the economy, and not at least mentioning that autumn budget where you could see further fiscal tightening come through? So that's the backdrop there. Switching over just in terms of zooming out, in terms of where the Bank of England is versus the Fed, take a look at this chart from our colleague Dan Curtis. Really interesting to note that there are very few episodes in history where the rate differential has been as wide as it is right now in the cutting cycle between the UK and the US. So if they do cut today, then you're talking about more than 50 basis points rate differential in terms of where we are in the cycle. And that hasn't happened that often. It just tells you that other central banks around the world are now beginning to cut at a faster pace than the Fed, something which we know President Trump is not so keen on. So interesting factoid over there. Well, for anyone who is into these types of charts, Bloomberg Terminal users can access them, and others use throughout the show at GTV Go on the Bloomberg Terminal. And remember, there's so many earnings that have been hitting today. We're staying on top of all of them here at Bloomberg. The impact of U.S. tariffs, that's going to be a big one. Obviously, going to be asking about that in our interviews that are coming up. We've got one with the CEO of Sandoz, with Merck, and with MERS. So we've got shipping and pharmaceuticals, obviously main sectors that people are very focused on right now, not least pharmaceuticals, because there's still not a lot of clarity about what's going to be happening with the sectoral tariffs there. We did get more clarification on semiconductor tariffs, now awaiting pharmaceuticals. We'll see what happens in the coming days. But that's it for Daybreak Europe. The opening trade is up next. This is Bloomberg.